Well, hello, everybody. This is Paris Williams from Next Level Financial. Very excited to have you all here today in our November webinar. Of course, we have James here. Go ahead and introduce yourself.
Hey everyone, James Williams, you know me with Next Level Financial. Happy to be here. Excited about the conversation that we're going to have today. Timely topic. So this is going to be great. So strap on your seatbelt and let's go.
Yes, yes. I'm excited to, in a second, I'm going to let DA introduce himself, but people might be wondering why we are having a webinar related to tax. And it's because I want to say it's probably the number one or two thing that I get questions about that I have to refer out to other people. I just had somebody who I thought knew us so well schedule a meeting, and she wrote in the question, what's the purpose for this meeting? She wrote, I need some tax strategy. And I was like, okay, let me give you my list of people. So very excited to have one of the experts that I can refer you to when you need tax strategy. DA Wilson here with us today to talk about tax considerations for charitable giving. Without further ado, DA, would you please introduce yourself?
Well, thank you so much, Paris and James. I'm excited to be here today. I'm one of the few people that actually enjoys talking about tax. This is my passion. I've been doing it now professionally for 7, 8 years. And I'm excited. My background is, of course, I'm a lawyer. I have a JD degree, but I also have an advanced law degree in taxation, in addition to my law degree. So I specialize in tax. I do a lot of work with individual taxpayers, with business entities. I do a lot of stuff in the nonprofit slash tax exempt space. So this topic here is near and dear to my heart. It's a niche area for me. It's an area that I really enjoy speaking about, representing clients, educating people so they understand this area as best as they can, right? And so we'll talk about a bunch of different things today. If there's questions, I love answering questions. Although I teach at Georgia State adjunct, I don't like to lecture. I taught last night. I lectured for 2.5 hours. So I don't really want to lecture today. I want to have a conversation, ask questions. I want to engage as much as possible with everyone who's on the call today. So looking forward to it. Ready to go.
That's fantastic. This is great. I have a lot of questions, so let's get into it. Next slide. All right, we're just gonna hit it right off with a question. Charitable giving. I know when we talked before, you talked about like levels, like you have to kind of start at different levels, but why is charitable giving even important for us as business owners?
Well, it's it's really important because for business owners, we all typically have an exit strategy, right? We don't want to be an owner operator forever. So I have conversations with my clients about what does it look like when you transition out of your business. And so typically it starts off as being an owner operator and then being truly self-employed when the business runs without you. And then you kind of shift into the philanthropic space where now you have some extra cash. You want to avoid paying taxes legally, ethically. And so instead of giving that money away, you sit down with a tax advisor, a CPA, a tax attorney, and you start to identify different ways for you to give some of your excess money away as a for philanthropic needs or for legacy purposes, as opposed to giving it back to the federal government. And that's a strategy that's fully embraced by the federal government. The government has carved out these areas of charitable giving for individuals to do things that they want you to do. So, as we have conversations about whether it's a 501c3, 4, 5, all these areas have been blessed by the government as an area that they want to see taxpayers do good deeds and do good work in. And so
Yeah.
as a business owner, it's really good for you all to take advantage of that and understand that this is kind of the next step for you once you move beyond just owning your business.
Yeah, I think that's so great. And I think we were having a conversation about this, and really, taxes in theory is the government allocating funds to the necessary places for the public good. But this charitable giving gives us an opportunity to have more control over where those taxes would have gone to some general pot to a place where we want to go. So it's super important, very strategic in terms of how we do this.
Yeah, I mean, to your point, James, that the federal government constitutionally has limitations, right? The federal government cannot be involved in religion, for example. So what they do indirectly is they encourage religion by making churches tax exempt and giving people an incentive to donate their money to a church for religious purposes. So these areas really kind of act as a subsidy, right? They're subsidizing some of the government initiatives that they just can't get involved in, constitutionally, or quite frankly, they don't want to do it, right? So they encourage and they incentivize us to do charitable things with our dollars. So the government doesn't necessarily have to pick up that tab, pick up that bill.
Absolutely. Very good.
Next slide. All right, we talked about misconceptions. What are some of the big misconceptions that you encounter?
Well, some of the biggest misconceptions that I encounter in tax, or when I sit down with a lot of my clients, is I have to sometimes dispel the notion that the area of tax law is politically driven, right? What I tell my clients, and I'm on the phone with the IRS a lot, which is the enforcement agent for the Department of
Yeah, we
Treasury.
all know who they are.
Yeah, right. They don't really ask me whether my clients are Democrat or Republican or gay or straight, whatever the case may be. They're really concerned about collecting tax, right? And so taxes, whether you're rich or poor, they impact everyone, right?
Yeah.
And so especially for business owners, I try to encourage business owners to look at this from a more economic perspective, because I don't care who you voted for, right? You're going to be taxed. You're going to be taxed heavily, right? You're going to be paying income tax, payroll tax, property taxes. You've got a business registration, business license. All those are forms of taxes. And so it's my job to have a conversation with my clients about understanding that we need to ethically and legally reduce your tax bill as much as possible so you can have more money, you can preserve that capital, you can invest it for your family, or you can reinvest it for your business, right? And you can have more access to your capital. That is the true game of tax. It's about minimizing this bill, again, ethically, legally, so you can preserve your capital and you can do different things with it. And that type of consideration, again, it's not a political one, it's an economic decision.
Absolutely. And one other thing that I talk about when I'm talking to our clients is, from my perspective, I like to make sure that we're being smart about it, and we're not just minimizing, we're not throwing a whole bunch of expenses or cost out there, just, and we're reducing our profitability, and it's not strategic. Like, I still, from my perspective, I still want us to grow. I still want us to scale. But how do we sort of, balance that, minimize the taxes, make sure dollars are going to places where we want them to go, and still, and still be profitable, still make sure that the business is healthy. So,
Absolutely, James. That's a fantastic point. So often business owners are encouraged to minimize their profits in order to avoid paying taxes, right? Well, what that does is it shows a business that's not successful,
mm,
which oftentimes prevents you from, financing a home or getting commercial lead, a commercial purchase, whatever the case may be. So there's a healthy blend of, taking deductions, right? But at the same time, making sure your business is profitable and paying the necessary amount of taxes so your business is healthy, right? And you just don't want to gut all of your profits and then you got nothing left. Now you can't buy a house. Now you can't, buy trucks for your business, etc. So there's a blend that needs to be considered, and that's why sitting down with your financial professionals, your bankers, and such, your tax professionals is so important.
Absolutely.
All right. So thinking about different businesses, right? We're all set up differently. And I know you can't get into this really deep in the, time that we have, but how do the strategies vary from business to business?
Yeah. So it's really important to know that as a business owner, you own a business, but your business may have a different tax identity from someone else, right? And so the first question to kind of ask in this space is, if I want to engage in some type of charitable donations or whatnot, what type of business entity do I have, right? For tax purposes, right? So I'm not necessarily discussing whether or not you have an LLC. What I'm discussing is whether or not your LLC for tax purposes is treated as a sole proprietorship, meaning that you're filling out a 1040. Your LLC is treated as a partnership, meaning you're filling out a form 1065. Whether your LLC is treated as an S corp, which my LLC is for tax purposes an S corp, which means you're filling out an 1120S, or whether or not your LLC is being treated for tax purposes as a C corp, which is essentially an 1120 form, right? So those forms are going to dictate how you need to consider charitable giving, right? So the first three, sole proprietorship, partnership, S corp. I like to bundle those together because those three entities are considered pass-through entities, right? Which essentially means that those three entities do not pay income taxes, right? And because those three entities or tax classifications more specifically do not pay income taxes, then they cannot take on a charitable deduction because your charitable deduction offsets income, right? Those three entities, their profits pass through to the shareholders, to the owners of the company. So, for example, your partnership and your S corp, you'll receive a K1, right? Which basically says if my business made $20,000 worth of profit, now I have to report that on my individual tax returns. And at the point where you have to accept or report that individual tax, that income on your tax return, that is where you need to be considering charitable deductions, right? So for my clients say, I'm just, I'm going to have my business take a deduction or write something to this nonprofit. I want them to receive credit for it. Well, if you got a sole proprietorship, a partnership, or an S corp, if you process something in the name of your business is not going to receive credit for that because they can't. Your individual company will. So maybe the name is a little bit different, but you need to understand that. Whereas you have a C corporation is a separate tax identity. It's a separate a taxable entity separate from you. So that type of corporation or type of entity can in fact pay taxes because that entity pays taxes so it can actually make charitable contributions, right? So for example, like Apple or Google, like these big corporations, you'll see if you go to their website, they oftentimes create a separate nonprofit and they send money from their organization to that. It's not the case if you have a sole proprietorship or an S corporation. You would be contributed from your personal. So you need to make sure before you get into this space and you start making donations, you need to first identify what is my tax identity of my business and whether or not that will be reflected upon me, a donation on the individual level or at the corporation level. And most people, from my experience, most people are going to fall into the sole proprietorship partnership S corporation, the most common forms of business. So be very, very careful and make sure you're not making contributions in the wrong capacity and you're getting credit for them.
So DA, so if I am S corp, for example, or I have an S corp, and I make a contribution to some charity in the name of that entity, from that entity, that still does reduce my income and the amount of income that I take on my K-1. Is that right? Does it still have a similar impact or no?
No, it will not, because at the end of the day, your S corporation has or will not be able to report any income. So
Mm-hmm.
what you will need to do is you will need to recharacterize that contribution as a contribution from yourself individually. Right.
Mm-hmm.
Like, and I get it, right? This coming from, the Wilson firm, but for tax purposes,
Mm-hmm.
how that needs to be reported, it needs to be reflected on your 1040. Now, here's the challenge with that, right? When you're reporting it on your individual tax return, right? You may, because the government changed their standardized deduction, you may receive credit for that, you may not. There are a lot of charitable contributions now that just don't make sense because their standard deduction is so much greater than those itemized deductions, which these charitable contributions would be considered itemized. So
Right.
I don't want to get too far into it because it'll get probably confusing. But the short of it is, understand the type, your business's tax identity,
Mm-hmm.
understand, how much you want to give, which is understandable, but where that money ultimately is going to be recorded and it's going to be reported, and whether or not it's going to make a difference at all. I'm not saying, don't give, because, it may not be counted because of the standard deduction is so high, but there's an analysis that goes into it. There are a lot of people who are frustrated now, like, man, I don't even get to use my charitable deduction, right? I don't even get to use my tithe and my offering. Right. Yeah. And that's because the standard deduction is so much higher these days. But it's worth considering, and it's really worth considering that knowing the difference between having a pass-through entity and a
Mm-hmm.
double taxation entity, which is the C Corp, and how
Mm-hmm.
that's going to impact your charitable contributions.
Okay, that's great. Just one more nuance, at least nuance the way I'm thinking about it. There may be a lot of business owners that are listening to this that have sponsored events for charitable organizations, and they become a sponsor. Is that is that like, strictly sort of business expense? Um, is that just kind of fall into that category and not into like a charitable giving category?
Yeah, yeah. I mean, the good thing about it, a business can characterize things separately, right? So a sponsorship could be considered an ordinary necessary business expense and just a regular deduction that they can take.
Mm-hmm.
So, and we'll talk about this maybe a little bit later on. Not every charitable organization, tax exempt organization, can even receive or the contributions are even considered as deductible, right?
Mm-hmm.
So I'm a member of a golf group. We're a 501(c)(7. You know, our contributions are not deductible, right? So
Mm-hmm.
it may be wise, to your point, instead of making a donation, to do a sponsorship. Because
Mm-hmm.
now, as a sponsorship, I can say that was a business expense for marketing purposes, as opposed to giving money to a tax exempt organization that cannot give me a tax deduction. So
Mm-hmm.
that's a big part of it, understanding which entities
Mm-hmm.
can actually receive or give deductions, because not all of them can.
Mm-hmm. Yeah, makes sense.
That would be something where we want to reach out to you even before doing something like that, right? Or look it up and make sure that we understand before we make that donation or that
Yeah,
sponsor, do that
yeah,
sponsor.
yeah, absolutely. You want to make sure, again, there's, I think, 26, 27 different classes of 501(c), with
Mm,
501(c)(3) being the most popular.
yeah.
Most people kind of assume that if you're a nonprofit, that you are a 501(c)(3, and if I give money to you, I can take a deduction. That's not the case. So to your point, Paris, you certainly want to have a conversation with someone like me that can actually let you know, hey, is this actually going to lead to a deduction, or are you just throwing your money away. I mean, it's fine, you know, it's nothing wrong with truly giving your money away, but most people give to nonprofit organizations because they anticipate some type of deduction, and that's not the case all the time.
Yeah, yeah, makes sense.
Mhm.
All right, we have a professor here today, so we figured we could at least get the building blocks for, like, what do we need to understand before we move forward about charitable giving? Give us the one-on-one class.
Yeah, so a few things, and you see them numbered here, but it's really important to understand, right? Us as entrepreneurs, like, and I'm an entrepreneur. It's one thing I love about my business. Like, I connect with my clients. You have a business, I have a business. We have payroll together. We have the same issues, right? It's no different just because I'm a tax attorney. Trust me, I struggle with this stuff. And the biggest challenge shifting from the world of for-profit to the world of nonprofit is understanding that the world of nonprofit is really about putting your purpose before profit, right? It's a totally different shift. In our world, you know, as much as, you know, we're passionate about what we do professionally, it is about profit, right? It is about that bottom line. It should be about the bottom line, right? That's a totally different shift when you talk about going into the charitable world. So if you are a business owner and you're considering, you know, starting a public charity or a private foundation, understand that there needs to be a little bit of a mind shift from just the for-profit, you know, the capitalism mindset that we all have as entrepreneurs to a more philanthropic, you know, space, right? The second thing is understanding, and this is really important, understanding the difference between a public charity and a private foundation, right? So often those two terms are just thrown around as if they're synonymous, and they're really not. You know, and so there's a lot of confusion around what a public charity is and what a private foundation is. And for tax purposes, they're treated very differently. That's why it's so important. A public charity is an institution like a school, a church, a hospital, right? Where their source of funding is derived largely from the public at large, right? Churches, hospital, schools. They serve the public. The funding comes from the public at large. A private foundation is another form of another form of a nonprofit, but its source of funding really comes from private sources, right? It comes from a family, it comes from donations, to a large extent, they're treated very, very differently, right? And so, you know, the benefit of a public charity versus a private foundation is really the bullet point number 3, is understanding that the public charity, because they serve the public as at large, schools, hospitals, churches, they have a greater contribution. They're considered 50% organizations, which means that a donor can give 50% of their adjusted gross income to a public charity and receive a deduction for it. Whereas if you have a private foundation, they're considered 30% organizations. So you can give 30% of your adjusted gross income to private foundations and receive a deduction. You know, that's really important, because as a business owner, you need to understand where bang for your buck is going. You don't want to give 40% of your adjusted gross income to a private foundation with the thought that 100% of that 40%, which is confusing, I know, is deductible, right? You need to know, oh, well, this is a private foundation, and I gave 40% of my AGI, not going to be able to take that entire deduction this year, right? Or I gave 40% to my church, and, well, I could have given an additional 10%, or I gave 60% to my church, and I exceeded that. So it's important for donors to recognize that, to understand whether you're dealing with a 50% or a 30% organization. And then also, too, if you're considering starting a foundation, structuring this business to maybe be more attractive to donors, right? Maybe you say, well, how do I open up a public charity? Because it's more attractive because people can give more of their money in theory and get a greater deduction to a public charity. So maybe we want to open up a public charity as opposed to a private foundation. And there's some small nuances because there are two different types of private foundations. I'm not going to get into that today, but there is a way for you to open up a private foundation where it's treated as a public charity. But just know that there is a very big difference between the two. So when you hear people talking about, oh, I got a charity, right? You want to think, well, is it truly a public charity, right? Or is it, I got a private foundation. Is it truly a private foundation? And that would tell you what type of contributions you can give to it. And then also too, being certain or understanding that with nonprofits, if you're considering opening a nonprofit, that a nonprofit has no owners, has no shareholders. And this is part of the shift that a lot of for-profit business owners run into. They open up a nonprofit, they found it, it's named after their mother, their grandmother, or someone that passed away, something that's near and dear. And what they fail to realize is that organization, that nonprofit has no owners, right? It has a founder, it has a board, and you can be removed from that organization if you don't do a good job. It doesn't matter if you put $1 million into that organization or you contributed $1 million piece of real estate to that organization. You don't own that organization. So there's some really famous cases of that. Kanye West was removed or disassociated from his mother's nonprofit. Lance Armstrong, the famous cycler, same thing. So that happens a lot. Understanding that you're not going to necessarily own this organization as you do your for-profit. And then the last bullet point is understanding, I touched on this before, the difference between a donor and a donee. The donor is the individual who's giving the money. The donee is the institution that's receiving the money. And we may have people here that are interested in actually becoming a donor or a donee. And so the conversation we need to include that in our conversation.
Mm-hmm. Yeah. 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 I was just, as you were talking, I was thinking, I remember hearing about Lance Armstrong and how, after, everything kind of came out about the doping, how his organization, separated from him. So yeah, something that is, it's kind of eye-opening, and you gotta, it's definitely a different ship from ownership.
Yeah, I've seen that a lot, unfortunately. You know, I know, you know, business owners who have contributed a valuable piece of real estate to a nonprofit, and then a board comes in and removes them from their nonprofit, and now they're separated from their property. And so just from the outset, you have to consider, what would happen if you found this organization, you put a whole bunch of money in it, you get a tax deduction for it, and then you're removed like Lance Armstrong. So you want to consider that. You want to consider that from the outset. This is not yours. These nonprofits are owned by the government. In exchange for tax exempt status,
Yeah.
they strip you of any ownership stake. That's the quid pro quo. You pay no taxes on your profits. You give us ownership of this company, right?
Yeah.
If you want ownership, you pay taxes, and that's what the for-profit space it really represents. So really, really important for business owners who are transitioning into this space to understand that.
Yeah, for sure.
All right, we have some time for the more advanced charitable giving, but I think like I'm still stuck on the 101, if I'm honest.
Yeah.
So
Well,
give us a
and I'm
little
just,
bit on the more advanced level.
yeah, and I'm just, so I like to talk about these things, Paris, honestly, because I don't like when someone's introduction to some of these concepts comes from the wrong person, right?
Yeah.
It comes from some flyer online. Like I got into this huge kind of debate online this past week with someone that I respected, who I consider to be a community leader. In fact, they are. They're state representative posting something about tax online that just wasn't accurate. And unfortunately, you know, it impacts communities that don't have as much exposure to this stuff more than it does communities who do have exposure to it. And the communities that do have exposure already either know about it or know that it's erroneous, right? It's the communities that don't have as much that may take it at face value, and it could be problematic. So I'm, to your point, I'm going to touch on these very lightly, just for the sole purpose of people having a little bit of exposure to them.
Yeah.
So if they were to hear about it somewhere else, they may know, oh, that's not right, right? And I say that because these more advanced topics, again, it's advanced, right? If you go and get your PhD, you're not ready for your PhD when you're in middle school, right? You have to grow to get to that point. Sometimes people position these advanced topics as if like, hey, we can all do it. That's not the case. There's a time and a place for everything. This is advanced. I'm not encouraging anybody to take advantage of these right now, but at the same time, we could have people on this call that are ready for this. So just a really quick touch.
Well, and one thing, DA, is we work with people that are rapidly growing, right? And so sometimes, you know, James will be kind of supporting the business owner to build a team. And sometimes you don't know when you level jump. Like you, let's say you're at 2 million in revenue, and then next year you're at 3, and then you're at 5, and then 10, right? So we'll say, like, hey, the tax strategist that you had when you started your business
Yeah.
8 years ago is not the same person that
Yeah.
you need today. So these, like, sometimes it can sneak up on you going from like the 101 to
Yeah.
being this more advanced strategy. It can just
Yeah.
sneak up. So I'm glad that you give us a little touch.
Yeah, no, that's an excellent point. You know, sometimes you know your feet grow really quick. You know, you may go from a
You care
size 8
too.
to a size 12 over the summer. You know,
Yes.
we all have kids, so that
Oh yeah, yeah.
happens. So, um, but yeah, so and these are, like I said, some more advanced topics. But you've got a charitable gift annuity. Basically, what this is, it's really, really basic. It is somebody who has, you know, excess funds or, you know, $1 million property or whatever. And they essentially decide to transfer this money or this property to a public charity, right? In exchange for that, the charity gives them an annuity for life. You give me $1 million, I pay you a fixed annuity for the rest of your life for X amount of dollars. When you pass away, the rest of that proceeds goes to the public charity. Now, the benefit of it is, you know, that $1 million, I may be able to take a tax deduction for that contribution right up front. I may be able to get a stream of steady income for the rest of my life. And of course, the public charity receives money at the point where I pass away or the annuity expires, right? So that's a very kind of very basic approach. The charitable lead trust is a little bit different. It's where there is a trust that's created. And in that trust, there is property or cash, you know, that is it's transferred over, right? And so for the life of that trust, there is a donor or a beneficiary that receives funds through that trust. And when the trust expires, then the charity receives the proceeds, right? So I have a child, I put money into a charitable lead trust, $1 million. It benefits, you know, my children, for example, for the period of time. When I pass away or when the term expires, the funds go to the charity, right? A charitable remainder trust is just the exact opposite, right? The money goes to the charity, and then the money goes to the charity, and then the funds go to the child, right? So it's just a reverse. But the benefit in these type of trust is it allows you to take your estate and pledge it over to a nonprofit, so to speak, and have beneficiaries associated with it that can receive the benefits of it while you receive your tax deduction. And then the charity will either get the proceeds at the beginning or at the end. Your individuals will get the money, or your children, for example, will get the money either at the beginning or at the end of it. But it just allows a different structure, allows you to take advantage of different things from estate tax purposes, for federal income tax purposes, and also too to be philanthropic. These type of individuals may not want to create a nonprofit, right? They may also be trying to circumvent or get around heavy estate tax that's coming down the line, right? And so those three instruments, that's kind of what they're designed for. And then the last one, the conservation easement, again, this is really, really advanced stuff. I'll be honest with you, this particular area, I started not to talk about it, but I want to talk about it because you may be approached by somebody who wants to do a conservation easement, and they are being highly, highly, highly scrutinized by the IRS. Because people have just been treating them as a money grab. Like, in fact, I have a couple clients that got involved with these prior to bringing me on board, or they just did it on their own. They didn't even run it by me. And now they're starting to get letters from the IRS. So the conservation easements are amazing, but they've become too capitalistic, and people have been taking advantage of them, and the IRS is really cracking down. The short of it is let's say I own, 1,000 acres in Montana, and it's worth $100 million. And so I want this property to stay in this raw conservation state. And so I can pledge, say 900 of those 1,000 acres to the government. I could to conserve them in its natural state, which could be worth, say, $90 million, and receive a tax deduction or tax credits for that. But I'm pledging to preserve the land in its natural state. And that has a lot to do with just a policy of, trying to not overdevelop, the country, and keeping things in a natural state, rivers, forests, trees, wildlife, etc. And so what a lot of people have been doing is they've been creating these pools of investors to get into these conservation easements because the tax incentives are so great, and the IRS has been really cracking down on them. In fact, there's been some securities violations or allegations as well in this space. So be really, really careful. It can be a windfall if you have family property or whatnot, but you have to make sure that it's structured the right way.
Yeah. Yeah, on the first three, for example, what came to mind is our kids used to go to a private school, and there was a giving kind of person or department where there would be donors that would give lots of money. These were a lot of them were business owners, and they would give lots of money in different ways. Precisely related to some of these things that you were talking about.
Yep.
Because the idea is that the school is supposed to be long-standing, and so like they were investing or giving millions of dollars to the school.
Yeah, this stuff comes up. Like I said, it's advanced. But again, like I said from the outset, we're talking about just growth. And Paris, you mentioned this as well. Like, it's no telling when this could be available. This could be relevant in your life. Like, I've had clients, someone's passed away and they've been left, 200 acres somewhere, and or they inherit certain things. And so, and of course we have kids, things of that nature. So you never know when these issues are going to come up. I just wanted to touch on a couple of them so you could hear the term. So if you hear it some way, maybe you make a connection.
Yeah, absolutely.
Okay, I see my friend Tamara is here. Hello, welcome. She's gonna come on in just a minute. Huh? So we're gonna give it like 3 more minutes to try to wrap it up. So what questions do we need to be asking our CPA, DA, and
Yeah,
why?
so yes, so in Paris, you touched on this before. I think the biggest issue is, right, as you grow as a business owner, you have to make sure that your CPA or your tax professional has either grown to the level where you're at, or they've been waiting on you, right? Because that could be the case sometimes. So it's important to have conversations with them about that. It's, having a sole proprietorship, a partnership, an S corporation, a C corporation, understanding like the tax exempt world 990s, these are very different entities. And so the questions that I would ask is just, simply, how comfortable are you with preparing, tax returns for, tax exempt organizations? Have you done any work in the space? And if you do you mind me taking a look at some of the work that you prepared? It's not uncommon, for business owners to request, hey, you can redact some stuff out. I'm not trying to get EIN numbers or social security numbers, but I would like to see maybe a copy of some of the work that you've prepared, right? Also, let's have a conversation. You can take some of this information that we've discussed today, and you could ask them, like, what are your thoughts on me starting a for-profit, a nonprofit corporation, either a public charity or a private foundation? And what are your thoughts between the two? Right? These are very basic things in this space, and they need to be able to flush it out, right? Will it be more advantageous for me to be a donor or a donee, right? And figuring out that, what is the difference between a 30% and a 50% organization? These are basic things. It can be confusing to the average person, but if someone is doing this type of work, it's going to be, these are going to be softballs, right?
Yeah.
And they're going to welcome this type of conversation. If it's something that they can't handle or they're confused, then maybe you need to have a separate conversation with them. I try to vet my clients, tax professionals in this space as much as possible. I don't try to throw anybody under the bus, but the bottom line is this stuff can get very complicated. This stuff can get very complicated, and we want to make sure, beyond a shadow of a doubt, that you have competent tax professionals.
Yeah.
Absolutely.
Because the way you find out that they're not, it's not good.
No, you
Those
typically
letters and those big tax bills, that's not
listen.
cool.
And the other thing I'll say this, and I'll say this and shut up. I think it's important for business owners to understand the difference between a tax professional, right, and an accountant, right?
Yeah.
A CPA, a certified public accountant.
Yep.
P&Ls, and that's totally different. Like, I know nothing about a P&L. In fact, I don't even know how to spell P&L, but I know how to spell tax, and I know taxes. And so what I tell my clients is, I had a client debate me the other day, like, oh, my CPA knows this, and you would know this because you're just a tax attorney. I'm like, well, this is a tax issue, right? Like your CPA, and he's a very successful client, but there's a presumption that you have a certified public accountant and they know tax.
Yeah.
Right? That's not true.
That's not true.
At all. And there's a presumption, and I'm a tax attorney, that I know accounting. And I'll be the first one to say nothing about accounting. So making sure that your CPA is a tax professional, not just an accountant.
Right.
The tax professional is extremely important.
Or sometimes we'll work with clients that have built out a team. So they will have maybe a CPA that is not, specializing in tax, but they could have somebody like you on the team, right? As you're growing, your team grows.
Exactly. And we all play our parts.
Yeah.
Right?
Yeah.
We all play our parts. And sometimes, as you grow, you need a little bit more sophistication. You need a little bit more nuance. There could be things that pop up this year. You could be preparing. You could have had a great year right now. Right now, the last month, you're like, my CPA is showing that we're going to show $100,000 profit, and that's going to cost us, $25,000, $30,000 in taxes. What can we do to get that number down? It may be time to consider that church contribution or whatever the case may be. And so having a conversation with me at this point of the year can be helpful as well.
Yes, perfect. Okay, I see we are running out of time here. You kind of covered on this a little bit as we were talking about the CPA. So let's go ahead to the next slide, James. All right. I'm
Hey.
gonna give DA though we're gonna come back to you for a final word, okay,
Okay,
before we end, so don't leave.
I'm finished. I got nothing else to say.
No, 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 come up with a final word. Don't, I need you to
That's
give
something.
I'm just laughing looking at down the line and how we have 4 people. I think we started with 1, it was just James, and then I came in, and then I was like, let's invite somebody else. And now I'm inviting more people. So it's like a party here. I'm so
Well,
happy because, some folks want to also give their time as business owners. And so I have met so many business owners who have linked up with Junior Achievement. So many that I decided to reach out to Tamara online via LinkedIn, got a tour, and I was super excited about it and invited her to come and share just for a couple minutes about how business owners can give their time, right? This is November and December. We're all thinking about that. So without further ado, Tamara, would you?
welcome, welcome.
Of course. Thank you for inviting me to the party. Happy to be here. Happy to share a little bit about Junior Achievement or JA. My name is Tamara Andrews. I'm our Director of Volunteer Partnerships and Experience here at Junior Achievement. And like Pear said, we have so many individuals, community members, college students, all types of people, but particularly company groups that come in and give their time, especially during this season, to share with our students. And if you haven't heard of JA or Junior Achievement before, we're an educational nonprofit. We have centers all across the state, but particularly in the metro area. We have our center that I'm out of here in Lawrenceville, one up in Cumming, and then one in downtown Atlanta. And we have middle schoolers come in every single day to our centers to get high impact, high energy, real world simulations where basically they get to either learn how to run a business for the day or learn how to budget and run a household for the day. And so we are always in need of volunteers, professionals to come in and just share about real life with them, talk with them as they get to come up with a marketing plan, as they get to vote in, our little town election. It looks like a little town in our space, as they get to figure out how to come up with a product price. Or on the other side, as they get to figure out how to, okay, should I buy shoes first this month or groceries this month? All of those things that they need a little bit of adult perspective to help them as they go through our programs. And so we work on the traditional school year schedule. So we have volunteer opportunities almost every single weekday from September all the way through May, particularly with a need coming up. Really, we have a few spots in December, but really we're looking ahead at, January, February, seeing if there are any individuals, company groups, folks who want to come and give their time to our students. We have, listen, this is what I'll promise you, a fun time, but also we have free lunch, free coffee, free parking for anyone that wants to come and share a little bit about real life with our students. We train everybody on site, so you don't have to be an expert in anything. We like to say if you've ever held a job, paid a bill, existed as an adult, you're a fantastic volunteer, already qualified to come in and talk about the real world with our students. And so we, no group is too small, so it could be you and one other person. It could be just yourself, or we could take groups up to 50 people. So, if y'all are looking, if anyone here is looking for a way to give back, to come in, we have opportunities, like I said, in the metro area at those 3 sites, but then also Dalton, Savannah, Augusta, and we really just have students every single day that are in need of, just for one day, it's a one-day commitment, just some of that mentorship and some of that guidance about, the things that they can expect in the real world. So I'm grateful for Paris for coming, taking a tour of our space, getting to see our programs in action, and just, allowing me the time to come and share a little bit about JA. But if you ever wanted to come volunteer sooner, or whether, in the spring, all you got to do is let me know, shoot me an email. You can find information. I know that our website is right here, georgia.ja.org. And there's a volunteer tab, and it has my info as well as some links to opportunities that we already have available. But I'm super grateful for, being here, being able to share a little bit about what we do.
Thank you so
Thank you.
much. Hey, you know, some business owners aren't ready for the charitable giving, but we all have some time that we can give, right? Like
Mhm.
we can always make an impact. So thank you so much for coming.
Of
James,
course.
next slide, please. I think this is it. So I would love for folks to connect with you. So DA, I'll swing it back to you if you have a final word for us about, you know, when do people reach out to you? When do they know I need a tax attorney? And then Tamara, you could chime in as well about how folks can reach you.
Yeah, so and that's a really good question because a lot of people are like, oh, I'll never need a tax attorney. Well, if you're paying taxes, you need a tax professional. Whether or not you want to hire an attorney to do it or not is totally separate. But I think the most value in taxes is with the planning component, right?
Mhm.
So right now, you should be planning for whatever tax liability you may have in April, right? Now is really earlier in the year, but certainly the last quarter of every year is time for you to understand before January 1st, what type of tax burden am I going to have based on my business or just, whether I'm, a pilot making a lot of money, whatever the case may be. And so I really encourage individuals during this season of the year to try to understand their tax liability before the end of the year, because the money is made in the planning. Like
Mm,
filing taxes, the compliance portion is really, really important, but the money is made. People say, oh, this company and this person doesn't pay taxes. It's because they spend a lot of time and money planning. They look at, I'm going to have this tax burden when I sell this property in 2030.
mm.
What can I do right now to try to negate or minimize that 2030 tax bill? And so that's where the money is made. So that's what I tell clients. Just shift the way that you see taxes from a reactive perspective to a proactive perspective. Have that conversation with someone like me or your CPA throughout the year and really understand what type of burden you may or you may not have the following year and years to come, or else you're going to be dealing with the last category of tax, which is tax resolution and controversy when you receive that letter in the mail. And so the planning helps a good filing season, but it also avoids letters and communication from the IRS. You never want to talk to them. I don't want to talk to them. So whatever we can do to avoid that tax controversy, tax resolution process, great. But if you need somebody, if you're already receiving letters, certainly give me a call.
Right.
Perfect. Tamara.
Yes. As I mentioned, you are always free if you're looking for volunteer opportunities. No matter which of those sites, you are free to contact me. My contact information is here, and I can connect you to the right day, the right month, the right center. And if you're looking to give a little bit of time back to the next generation coming up. Like I said, the most need coming up January and February, but we have options all the way through May, and no, group or no I guess, commitment is too small, because every single volunteer makes such an impact on what we do. So if you're looking to give some time, spend the day really connecting with Gwinnett area students or, students in the Atlanta area, anywhere, I am happy to set that up. You can give me a call, give me an email, and I'm happy to share more information.
Awesome.
Perfect. Thank you guys so much. I know we went a little bit over. We appreciate you. All of us business owners now have no excuse. We have somebody who we can reach out to because the money is in the planning. We have somebody we can reach out to if we want to give our time and make an impact even before the year closes out. So thank you guys very much for coming. And this recording will live on our website and we'll send it out to everybody who registers. So thank you so much.
Thank you all.
Thank you.
All right.
All right.
See you later.
Appreciate you. Thank you.